Hi, I'm back after a break, and guess what? It's because of all the flu and the influenza virus. But I have some great news. Today it's my favorite topic and habit number 6, and that is the power of taxes. I'm recording this video the day after, I don't know if it's a historic budget, but a budget that took away a lot of the tax burden for the lower middle classes, whereby there is no taxes for incomes up to 12 lakhs. You're on the Wealthy Habits series, and today I want to talk to you about the power of taxes. In my opinion, this habit ranks perhaps head and shoulders equal or above to all the other habits that we've spoken, because it is like a double-edged sword. If you don't use it rightly, taxes can cut into you. But if you use it rightly, it can cut the other side, meaning it can cut the amount of taxes that you pay and put a lot more money in your hands. Let me share with you 4 stories. And before the 4 stories, I'll share with you 2 perspectives. There are 2 kinds of people who do not understand the power of taxes. And those are the ones that ignore the positive power of taxes and the ones that ignore the punitive power of taxes. An example that I can give you for number 1 is a friend of mine who forgot to file his return on time because of a family exigency. The result of that exigency was that a 60,000 rupee benefit that would actually accrue to him and result in a cash refund, he was actually deprived of that. This friend that I just mentioned is someone that I'm helping structure his taxes and get into the world of passive income. And this year, thanks to some of the structuring that we will do, his refund is likely to be in the vicinity of 3 to 5 lakhs, all taking advantages of the benefits that knowing taxes accrue to you. The second category of people, in fact, it was me and it was an oversight, are the people that ignore the power of punitive measures of taxes. For one of our businesses long ago, and it was an oversight on the part of the filing executive, we filed a service tax return a day late, just a day late. And for 3 years, it was unquestioned. I was not even aware that the return was filed a day late. And when the switchover happened from the service tax regime to the GST regime, we got 45 calls, all for the payment of just a 500 rupee fine. 500 rupee fine for a single day delay in filing a tax return. I find it a bit odd, but the history of taxes is such that in the British era, for payment of a paltry sum of 15-20 rupees, laws were enacted to actually snatch away your property. Many of those laws remain on books even today. If you skim through some of the papers, you will see that there are headlines that tell you that for non-payment of property taxes, for instance, the BBMP or the Bangalore City Corporation is going to auction a few properties. Now, the money that they will make from the auction is likely to far outstrip the property taxes that is owed on the property. But that is the power of the taxman or tax law. The taxman is somewhat like a god. Just like our gods, he can give you boons and he can also curse you. But all you need to understand is how to invoke his boon side. Meaning, you need to understand that part of the tax code or your tax law where you can structure your income, structure your businesses that give you the maximum tax benefit. Let me give you an example. Let's say you're a salaried person earning salary income today. According to Indian income tax laws, based on the latest budget that was passed yesterday, if you are up to 12 lakhs or 12,75,000, you need not pay any taxes because the government offers you a standard deduction called standard deduction for 75,000 rupees, because it considers that that would be the maximum amount of money that you're possibly spending in going to this job and earning that income. Now, if you live in a major metro or even a minor metro, you and I know that you actually end up incurring much more than that to go to your job, eat food while at work, and pay for all sorts of things like your cell phone plan that actually allow you to perform your job, and maybe that laptop or that laptop repair and things like that. So the 75,000 deduction that the government offers you or the tax code offers you is not a good viable expense reduction. Now let's say you told your company, if the company were to allow that you would like to work as a contractor or a consultant, you would be able to deduct all of the expenses because now you're actually running a business. The government wants, and the government actually encourages you to be an investor and a businessman, because a businessman actually takes a bit more risk or a lot more risk. For instance, in order to terminate a salaried employee, a business has to go through a series of procedures, but the same is not the case with a consultant or a contractor. So like I said, there are pros and cons with every move, but world over, there are people that structure their employments in the form of a contract to be able to take advantage of tax law. For instance, I'm aware of lots of my friends in the US who actually work for major corporations and structure their engagement in the form of a contractor to be able to take advantage of lots of options like the tax law for one, and the ability to deduct expenses. I will leave you with two small other instances. One instance is about how tax law treats different kinds of income. In the 2012 election, when Mitt Romney faced off against Barack Obama, there was a lot of discussion around how Mitt Romney's income, which came from investments, and that was called carried interest in the IRS tax code, attracted a lower tax rate of 12% versus a salaried person's taxation, which possibly attracted at that income figure upwards of 30% of federal tax. Now, I'm not getting into the politics of it, but I'm trying to tell you that as soon as you see something like that, the first question that you should ask yourself is not to badmouth that provision, but to say, hey, if somebody's earning so much income and if they're paying only 12% in taxes, how can I start earning income similar to that? Because you're going to be able to reduce your taxes by actually earning income like that than your ability to change the sitting precedent and the tax law. The second one is the power of compounding and how capital gains tax actually reduces the amount of money that you compound. Let's say you invest in a stock, and if that stock is something that grows over a period of time as a result of the cash flows that it generates, and it's a listed stock, you will be well off leaving that stock untouched. Because if you were to take money out either through selling the stock or ask for dividends to be paid out, you will pay capital gains tax on a yearly basis. Usually it is somewhere between 15 to 25% depending upon the country that you live in. That means if you earn $1,000 or 1 lakh rupees, 15% of that goes away. Now, if you didn't insist on that distribution, the value of your equity or your stake goes up. And if you hold it for 20 years, the untaxed portion of that, which is 15%, is going to grow exponentially. So taxes can be very, very powerful. I consistently look at my bank accounts. I maintain a net worth tracker. And one of the things that I constantly look at is complying with taxes. Taxes are very important. If you know how to leverage it, it can be a blessing. If you ignore it, it can be a curse. I know of a gazillion number of businesses that do not raise proper GST invoices, that do not bother to insist on GST invoices by quoting their GST number, and they are leaving a lot of money on the table. Imagine this: if you run a business and if you have a 30% margin in that business, if you fail to take input credit, which is somewhere in the vicinity of 12 to 18%, that is straight 12 to 18% margin that you've left on the table. You will benefit by actually working with the tax law in a positive manner and structuring everything around it. Because believe it or not, if you don't do that, someday that will actually get exposed. You're better off doing it today and taking advantage of it today. I'm ending this video, habit number 6 in the Wealthy Habits series. Do not ignore the power of taxes. The next video, which I will come back with, is the absolute very last habit, and I'll see you then.